Hi, welcome traders. Welcome to JJP Trading Academy. Till now, in our YouTube channel, we have posted many information about the Indian stock market, as well as many strategies and about our services also in our YouTube channel. So we are very happy to release the 50th YouTube video in our JJP Trading Academy YouTube channel. And we are thankful for every subscribers and supporters of our YouTube channel till now. And if you have not subscribed to our channel till now, I request every traders to subscribe our channel and click on the bell button. Then only you will be receiving the upcoming video updates of our channel, and you will be knowing the many informations about trading. Today in this video we are going to see about the who are all institutional traders and who are all the retail traders in this video. Institutional traders are the traders who plays the main role in the Indian market to give the big volatile movements to run the market continuously by placing the big quantity of orders. So the traders who will be placing the big quantity of orders will be considered as a institutional trader. For example, here we consider the FII foreign investors and DAI domestic investors as example for institutional traders. Retail traders are the traders who will be trading with a small quantity for their own basis. So for example, we are the retail traders who will be trading with only a small quantity to make the small movements in the market. So the market is most probably moving according to the institutional traders, buyers and sellers orders only. So no retail traders can affect the market in live market, or whatever the trade entries we punch, it will be in a drop of water from the sea. So no orders can move the market with the retail traders because we are only trading with a small quantity. The institutional traders are the traders who will be trading with the high lots, that is crores and crores of quantities they will be start trading. So this is the reason why the institutional traders can move the market, and according to their trap moves only the market is moving perfectly with the high volatile movements. And if you are a experienced trader, you would have been realized that once the stop loss of our stop loss hunt, the market will be giving a good movement after our stop loss hunting. So why this type of movements are happening, we can see with an example right now. So you just see that now I have opened Bank Nifty 15 minutes time frame future. For example, today in this chart you can see according to the previous market condition, that is till 11 o'clock, the market seems to be a good buy side movements. So according to our analysis, whatever we do in our technical analysis or fundamental analysis, we will be trying the market, that market seems to be a bullish move. So we will be taking the entry for bullish move according to the trend of the market. So you can see from 10:15 to 11:15 the market seems to be good bullish move. So we can most probably we can analyze the market that it seems to be a bullish move. So we will be taking the entry in this point 11:45. You can see for example only I am saying, for example, if we have taken the entry as long entry at that point, we will be keeping the stop loss as a swing low. The swing low stop loss will be low of that particular candle, and the stop loss will be perfect for according to our retail traders. We can keep this much stop loss only. So we will be keeping the stop loss here. So once the retail traders knows the orders has been placed here, what they will be doing is they will be placing the limit order perfectly at that point, and they will be hunting our stop loss and placing a huge quantity of orders for the buy entry. Do you know why these traders are making a huge quantity in our stop loss place? Because they will be getting the many huge quantity of buy orders to be punched. If there is no retail traders, there is no institutional traders. Only according to our stop loss hunting or our orders only, they can place the huge quantity of orders in the market. So this is the reason why every institutional traders trap the moves of the retail traders and place the high quantity like this. So you can see the market almost given 607 points after that stop loss hunting. So what we should do to avoid this type of trap moves? The only thing, every retail traders should think same as it is the institutional traders. We should think where the institutional traders will be hunting the stop loss and moving on. Then we should grab that opportunity of the high volatile movements in the market. Then only we can sustain in the market throughout lifetime. So I think this explanation will be helpful for every traders to know about the trap moves, why they are making the trap moves and entering into the market. Thank you.